As big tech continues to release its earnings, as a shareholder, I kind of wanted to go through some of my stocks and some of the positions that I do own that have just recently released their earnings, such as Google, Apple, Microsoft, and Amazon. Starting off with Amazon, there was a bit of a mixed bag. Amazon's cloud business reported 20% growth in the fourth quarter, but missing estimates. Amazon is a small position in my portfolio, but kind of going through Amazon and kind of their reports, there was a few articles by CNBC, and you can kind of read through and kind of get a bit of an understanding about how it kind of went and how the overall earnings report said. And Amazon's revenue in this cloud unit increased by 20% in the fourth quarter. It's a slower pace than what people had projected, but a 20% growth is still 20% growth. When you compare it to the 27.5% growth rate in the third quarter, it does look a bit like it's tapered down, but with how everything's been going, it's just kind of just how things have been. Cloud has been a strong part, same with ads, but that's something I will get on to. Cloud has been something that Amazon's kind of held their hat on for a little while now, and that's something they continue to build and continue to grow. And you could see last year, like they're mentioning here, Microsoft said last week that the revenue from Azure and other cloud services, where the company doesn't report in dollars, grew by 31% the prior year, down from 35% the previous period. So you can see the space is having really big growth, but potentially a bit of a slower time at the moment. Another article about Amazon was released, and it was to do with the advertising business that grew 19%. And this is massive when you compare it to Google and Meta, which is two companies that I'll touch on in a bit, with how kind of their advertising side of the business has gone. Amazon's advertising business has been great, especially this last quarter. And when you see these results, you can see that people are really moving a lot of their ads over to Amazon, and people are kind of transferring over there, and that's great for the business, especially when your competitors, your biggest competitors such as Alphabet and Meta, who are massive in the advertising space, kind of see a bit of a rough times right now. And as more you read through it, Amazon's advertising business continues to grow despite a general downturn in the digital advertising space. And you can see, the other people it hurt. It brought in $11.6 billion in just the fourth quarter. That's a 19% year-over-year growth, and that's massive, especially for a company that's continuing to grow. Shareholders are looking for growth still, even with the size of Amazon. This is kind of what shareholders are really looking forward to, and that's why the stock did see a bit of a mixed bag, because even though there was parts that probably didn't look as good for investors, kind of seeing this was really positive. Amazon's sales advertising still a small fraction, the $149 billion, which is crazy to say, because if that's considered a small fraction of something so large, because if a company can generate $149 billion in revenue in just the fourth quarter, that just shows you the size of Amazon. And as long as they can continue growing, and even if it is at a slower rate than what maybe analysts expected, like in the previous one, then it's still great to see growth in a company this big. Another massive company that reported earnings was actually Alphabet. Google missed on earnings and revenue, and this was massive, with the stock it's already down 4.46% in the pre-markets. But you can kind of look at how it's traded in the last month. It's had a really good month, up nearly 21%. But then the further you go out, you can kind of see how rough of a year Alphabet's had. You can see the recent rise now has helped it a little bit, but just a consistent downturn. And you look at the last 5 years, you saw a period where they basically did 50%. I think the stock went up 50% in a year. And since then, it's been kind of hard for the stock to replicate that. It's been on a bit of a downturn, or not even a bit, it's been on a downturn, a clear downturn, with it losing a large percentage of those gains that it gained up there. But it has been fighting back, and this news of it missing short really isn't going to be good for investors. And the more you go through it, you can kind of see how the macro and micro effects that everything's had on Alphabet. They missed on both top and bottom lines. And the company's stock dropped nearly 4%. We just discussed that, kind of how much it keeps dropping. And the earnings per share missed on revenue missed on. And yeah, same with Amazon. These massive numbers of revenue, but shareholders want to see growth at the end of the day. And $76 billion to the $76.5 billion expected. Even YouTube's been a massive space for Google, and that missed by a decent amount. But yeah, that's just kind of not what you expected, but it's just has been a rough time for Google, and especially a company that does so well in the advertising space. When people aren't willing to spend as much, companies don't want to be spending as much on ads, they're going to suffer. And that's what makes this Amazon part even more impressive. The fact that they saw such strong growth whilst their two biggest competitors saw a bit of a downturn. Kind of going through it more, Google was in the news. You saw it everywhere about their layoffs. They continue to lay workers off. But then you look at their actual reports when they did it back, they actually did grow employee count. And they continue to hire, so you might see these big layoffs, but Google and Alphabet, they continue to add more and more people, and that's just going to cost more and more money. And there are some firms, I can't remember exactly which one it was, a major firm writ out a note to them about it and kind of wanting them to cut back on their numbers. But yeah, another big thing, especially since I am on YouTube, kind of looking at the YouTube, the advertising revenue fell short, down 8% from the year prior. And yeah, especially when people were at home, lots of companies were investing into ads, especially on YouTube, people watching videos, great watch time. Other than Netflix, I believe they have the best watch time out of the major platforms. And YouTube is kind of adapting at the moment. You can see with things such as YouTube Shorts, all those kind of content that TikTok really got massive on. YouTube trying to adapt some of it. And they're trying to push that. You can see for creators as well, they're trying to incentivize people to do shorts and keep creating quick content to kind of get more people on board. But overall, yeah, it wasn't a good earnings report for Google. And kind of looking at it, yeah, the stock is down big. Even Amazon, the stock is down over 5% in the pre-market, which is even bigger than Alphabet. So you can see just the big drawback that tech's had at the moment. And speaking of tech, the absolute king of tech is Apple. And their sales dropped 5% as well. And that's when you know things are big. When sales of Apple, and they have such a loyal, I mean, you look at people who have a MacBook, they have an iPhone, they have an Apple Watch. It's just such a sticky system. You kind of get in the Apple ecosystem and you don't really leave. You don't see many people who leave. And yeah, you can see issues such as in China affecting the iPhone 14 Pro and 14 Pro Max. And that is true. You saw all the news in China to do with COVID and stuff happening at the factories as Apple's trying to relocate some of their workers, trying to relocate where they're creating their stuff just to keep things consistent and fears of what is happening in China. And yeah, they were down 5% lower than last year. It's the first year-over-year sales decline since 2019, so as we're going into 2023, so that's been a little while. Tim Cook did actually take a pay cut, which was a big thing. I saw it on a few reports on it. But yeah, you can kind of go through their earnings and just kind of see earnings per share down big year over year. Revenue missed by a lot. iPhones missed. Mac missed by a lot. iPad revenue is actually one place that they did really well, and 9.4 billion to the 7.76 billion estimated. So yeah, up nearly 30% year over year, which is big. But yeah, for everything else, you can kind of see pulled back. Service revenue good, a bit of a mixed bag, and that's not what investors are trying to see at this moment. They're trying to see stable, strong returns from companies, especially in such times where things have pulled back. You see this year to date so far, stocks have kind of rebounded, as you can see, even with Apple 20% in the last month. But again, you look out and they're still, even with this great run up, they still haven't got near these big high numbers that they were on before, like 180. And the stock's had a great time, but it's still well short of where it's been prior. The last one I actually wanted to touch on was actually Meta. And Meta has had a great time recently. As someone who was a prior shareholder of Meta, seeing this stock rise right now is actually really normally you'd be upset, but it's good to see, and I hope investors are actually enjoying it, because Meta investors did have a really, really rough time last year, and I know because I was one of them. Yeah, you kind of look at the year down 20%, but just falls. The whistleblower saga down 20%. It just kept falling, but it has been bouncing back. You look 51% in just the last month, and yeah, it's down a bit in the pre-market, but that is absolutely crazy. In 1 month to be up 51%. The stock has had an amazing rebound, and fair play to Meta shareholders who have kind of bit the bullet and has been holding for this long time, especially since the stock's been down. But even with Amazon showing such growth in the ad space, Meta shares have just been doing brilliant. You look at earnings, revenue, they beat out by a decent chunk, which is actually really, really good to look at. You can see they've cut back on workers as well. You see that amongst all the big tech users. They even beat out on daily active users, not by much, but they still beat it. Monthly users just a bit down, but average revenue per user is up. So these are kind of the signs that Meta shareholders have been looking for. You can see the response around virtual reality, that a lot of the shareholders really don't want the company to be investing too much of their money into that. It is kind of a losing game at the moment. It could be something future going forward, but yeah, it's just not really what people who are looking for gains in the stock do not really encourage that at this time. And yeah, it might be good going forward, but right now it's not really what they wanted to see. And I know when I was holding the stock, that really wasn't something that I was that interested in. I was kind of focused more on the ad side of things. But yeah, it's been a great month for Meta shareholders. Again, kind of going through it a bit more, kind of sharing my portfolio. This is one of my portfolios. This is one that just kind of invests a bit more in the tech stocks and those positions. You can see that, yeah, I've got a fair amount of money in them, except for Amazon. It's very small. Same with Google, very small position. And yeah, as a shareholder, I've been buying in. Well, things have been down. I do portfolio updates every single month, but yeah, things were down. My portfolio was down massive, especially being so tech orientated. Even you look at the S&P. The S&P is weighed by tech so much as well. And as things have kind of bounced back, has been really, really good for the portfolio. And for myself, I don't think I'm going to be buying in right now, just how much things have risen. I think if things do drop a little bit more, I might buy in again. But yeah, I was kind of buying into the dip, and it has turned out pretty nice for me. But yeah, going forward, I probably won't be investing too much in this portfolio into these positions as of this moment. But yeah, this time of the year, earnings season for the big players, kind of a bit of a mixed bag. You see Meta doing all right. Then you see some of the other ones doing rough. Microsoft shares, they reported a little bit earlier, so I was a bit late to covering that, but they've been all right. They're not down too much at the moment because they've already felt the grunt of it, but you look, they've had a good month as well. So overall, that's just kind of my thoughts on the tech earnings reports. Leave your thoughts if you're an investor in any of them, and kind of how this has affected your portfolio. Cheers.